Hey, this is Chris, and in this video I'm going to be talking about the ARK series of ETFs, what they are, why they've been getting a lot of attention recently, and whether you should buy them now. So the ARK series of ETFs is basically a brand of ETFs that are listed on the US stock exchanges that are focused on disruptive innovation. They have a suite of ETFs, and each of the ETFs is either focused on innovation more broadly or a specific aspect of innovation, including, for instance, financial technology. Now, the reason these funds have been getting a lot of attention recently is that their performance over the last few years has been phenomenal. The leader of these ETFs, Catherine Wood, has very successfully picked some of these big mega trends that have impacted markets and got onto stocks like Tesla and electric vehicles early. And as a result, the performance and returns of these ETFs has been probably better than most of the ETFs listed on the whole exchange. Now, as a result of great performance, the inflows into these funds have been enormous. In fact, early in 2021, the inflows per day into these ARK ETFs were even larger than BlackRock, the biggest asset manager in the world. The ETF, ARK ETF, Innovation ETF, and the rest of the series were getting $500 million worth of inflows per day versus the BlackRock iShares ETFs, which were getting slightly less than that. So obviously a lot of love and a lot of interest recently. Now, since early 2021, the ARK ETFs have started to fall a little bit. In fact, the main bellwether ETF, which is the ARK Innovation ETF, has fallen about 30% from its highs, which raises the question, should you invest in these ETFs now? Is this the pullback that you want to buy? Now, I think there's a couple of considerations to think about if you're looking at investing into these ETFs in the long run. The first one is the consideration of, is this the right time to be investing in the particular themes that these ETFs focus on? So what we know about active investing, and this is an active suite of ETFs, is that themes that active ETFs or active funds tend to follow do tend to come and go over the years. And so a period of good performance because a theme has worked is sometimes followed by a period of poor performance because a theme has gone out of favor. Now, a great example of this in an active fund sense was Peter Lynch's very well regarded and well-known Fidelity Magellan Fund, which he was basically in charge of in the 1970s up until the early 1990s. Now, over his tenure leading that fund, it grew from $20 million to $14 billion under management because it had sensational returns. It returned about 29% per annum, actually similar to what the ARK ETFs have returned recently. And as a result, the inflows kept on coming in and in and in. However, after that period, this fund, the Magellan Fidelity Fund, had a long period of underperformance. And in fact, over that time, funds came out and out and out of the fund. And the research that was later done by Fidelity actually found that despite the fund having great long-term returns, the average investor in the Fidelity Magellan Fund actually lost money over time. And the reason is that people tended to put money into this fund after it had performed well, which was the worst time to be getting in, and actually shows that active funds that follow thematics are quite dangerous for investors because the flows tend to come at exactly the wrong time. So the first question you should be asking yourself is this the right time to be getting into this particular theme? Am I early or am I late in the cycle? And if I am late, do I have the ability to keep on holding through a period of bad performance? The second question I think you need to ask if you want to get involved in these ETFs are the ETFs getting too big for their own strategy? So what tends to happen with active fund managers is they often perform really well while their funds are quite small and they're not having a lot of impact on the actual shares that they're buying. But as their performance is really strong and money comes into the ETFs, they actually tend to have more and more market impact on the shares they're actually buying. And so something you need to have a look at is what percentage of the overall market cap or the size of the companies that this ARK ETF is investing in is actually invested by the ARK ETF. And what these stats currently show is the ARK Innovation ETF currently owns over 10% of about a third of its portfolio. So 1 in 3 of the companies in the portfolio ARK actually owns more than 10% of the overall company. Now, is this a big market impact? Well, it's a reasonably large market impact, probably similar to some of the big passive index funds like Vanguard or BlackRock. But the danger being that if the theme stops working and funds start to flow out of the ARK active ETFs, because people are really following this theme and trying to chase short-term performance, then it could have a negative implication over a long period of time. A good example of this in the past was actually the Janus fund, which was famous in the original tech boom in the early 2000s and late 99. What happened with this fund is it grew its assets from about 100 billion to 300 billion over the very late part of the tech boom originally. But then when the tech boom ended and tech shares collapsed, it actually underperformed the tech index for several years. So while the tech index, the NASDAQ, fell about 80% from its highs, the Janus fund actually did even worse than this because funds kept on flowing out and out and out. So they're the two things I would consider if you're looking to invest in this ETF. Where are we in the cycle? And if we're too late for this cycle, am I prepared to hold long term? And is this fund getting too big for the stocks and the strategies it's investing in? And that one I think is up for debate, but it's potentially getting close to that point. Personally, I wouldn't be investing in this ETF or thematic ETFs in general. I tend to find that all the money flows into them and they tend to launch around the time that you shouldn't be buying them because it's where the retail interest is highest. And so I'd be sticking to the broad diversified ETFs and let others have fun with their thematic ETFs, and you can avoid the ups but also the big drawdowns that are likely to happen at some point.